Hi guys, everybody. Welcome to our first ever Facebook Live event. And today our topic is going to be about how to invest in risky assets like cryptocurrency, but in a safe manner. Of course, as you guys know, I'm not the expert of cryptocurrency. So today I have two special guests that are expert on this topic who has been studying this topic for many years. And they are none other than number one of the famous Singapore blogger, Budget Babe. Hello, Don. And also, we have Aaron here from MrStingy.com. Hi,
Hey,
guys.
hello.
Yeah.
Thank you for having us. Yeah.
Yeah, no problem. So maybe start
Hi.
with Aaron. Why don't you give like a short introduction about what is Mr. Stingy and why do you get interested in cryptocurrency?
Okay. So thanks, Stanley, for having me. I guess it's a blog about living life better, really. So and finance, money is definitely one of the key aspects in our life. So that's kind of how I got started in writing about money and stuff. Cryptocurrency, digital currency, it absolutely fascinates me. It's something that's new, and I'm like a super believer in it and what's going to come out from it. So that's how I got interested. And yeah, I think
Right,
expert is
right.
thrown around too loosely nowadays. So probably not just a interested person in it. Yeah.
Yep. Okay. And maybe as for you, Don, as well. I think you have made quite a number of interesting blog posts about your crypto investment and how is it doing, and you has been very transparent about it. So why don't you share a little bit about yourself? What is Budget Babe, and why are you so interested in cryptocurrency?
Sure. So hi everyone, I'm Dawn, SG Budget Babe. Same as Aaron, I wouldn't really call myself a crypto expert. I think a crypto enthusiast would be the right word. So I basically am interested in like everything concerning personal finance, including insurance, saving, investments, expenses, whatever.
Yep.
And crypto naturally fell into that ring. So I have to put it out there first though. When I first started, I was the biggest skeptic of crypto. So I can understand for everyone else who doesn't believe in it. I know how it's like because I used to be there. But
Yeah.
now that my eyes are open, I really do think like we're
It does
seeing
take
that
some time to
something
warm
big.
up to it.
Exactly. It does. It takes a lot of effort and reading and learning. But once you really understand it, I think you'll start to see the value and the tremendous opportunity that crypto offers us, not to get rich, but to
Right.
change and improve the world.
Right.
And then, if you put in your investments into stuff that you think will definitely last and change the world, I think then that's a really good investment.
Yeah.
It's not that much different from stock market.
Sounds good. Okay, yeah, before we dive right into the subject, just to make a quick disclaimer today is just for educational purposes. We are not investment advisors, so we're not giving an investment advice about both crypto or the stock market. So, going back to the topic, if you guys have any question, just type down your question and I'll be the moderator and go through the question with you guys. And of course, we will try to ask these two crypto investors as many questions as you can. And let me just kickstart out. Like if a someone new who is interested to maybe like just start investing a little bit about cryptocurrency, say Aaron, in Malaysia, what's the best way? So like what's the best exchange to go to or the best wallet to have? What do you think about that?
Right. So, well, you're asking me. This is an interesting question for me because I guess for full disclosure, I work. I have a full-time paid job with a crypto financial services provider, Luno. I'm actually in their office right now.
Yes.
Yeah, so Luno's here, and yeah, I mean, absolutely. I believe that if you want to buy Bitcoin in Malaysia, Luno is the place you go. I mean, the thing right now is that we're having some problems with our bank account, but yeah, apart from that, I absolutely think Luno is the best place to buy Bitcoin in Malaysia.
Yep. Okay. Actually, I quite agree with you. I was a customer of Luno until they got closed down. So no,
In
no.
Singapore, right?
No, I have an account in Malaysia as well. So
Interesting. I
Yeah.
should research that. Okay.
Yeah, okay. And maybe for you, Don, how can a Singaporean get started in cryptocurrency?
So I'm going to split my answer up into two, right? One
Okay.
would be for Singapore and then one would be international.
Okay.
So for Singapore, I think the easiest way honestly is through Coinbase. And
Sorry,
for
Don, maybe
beginners,
you need to speak a little bit closer to the mic. You're a
oh
bit
yeah,
soft.
sure.
Yeah.
Okay. So I think for beginners, the best way would be through Coinbase because it's the most user friendly and it's pretty secure to a certain extent compared to other exchanges because it also has the India wallet. For other options, you could also consider Gemini. And there's also over-the-counter options, local options such as CoinHako, or over-the-counter options such as Luma. So there's quite a few different platforms for beginners to get started. But I would absolutely recommend, not just in Singapore, but anyone internationally, if you have access to a Coinbase account, try that as number one. And then if you want to put in even more money, then Gemini would be the next one.
Okay. Yep.
Yeah, I think if I can add to that, Stanley,
Yeah.
I think if it's like a newbie, I mean, we never ask people to throw in their life savings or anything. It's always start small and start to learn, not to like try to get rich quick.
Yeah, exactly. So it really goes to our topic on how do you actually invest in risky asset safely. But maybe at the start we should have a poll. Do you consider cryptocurrency a risky asset?
Absolutely.
Oh wow,
Absolutely.
I can see a no from Don.
I think it's only it's only risky when you don't know what you're investing in. But I would
Right.
say the stock market has risk as well. Although I would admit that the volatility and risk go is a lot riskier. Then yeah, that's a yes.
Okay. Yeah, that you bring up a very interesting point because a lot of people misunderstand volatility with risk. So even in the stock market, when something is volatile, it doesn't necessarily mean that it's risky. And you have a good point there, and I'm glad that you point that out. So, and if someone want to invest in such an asset where they do not understand it fully yet, how how would you maybe tell them to get started? Like how when you first get started, how do you maybe position your sizing and like how do you make a meaningful investment and yet not lose your pants? Maybe you share some of your strategies, Don.
So I think when you first get started, it requires a lot of effort and a lot of reading. So I was spending anywhere between 5 to 6 hours every day just reading and understanding more about not just blockchain technology, but about what the respective firms do, what their team is like, what do they aim to solve, how are they going to solve it, so on and so forth. So you need to learn. That's the only way you're going to be able to manage that risk. So after you've gained the knowledge, you know what you want to invest in and why you're investing in it and where the value would come from. Then I would say in terms of position sizing, the golden rule is only invest in money that you're comfortable with using. Because the truth is, we're still in the early days of the crypto universe, and the high volatility isn't something for everyone. So you can easily see your entire portfolio go down by a huge percentage. And if that's not something that you're comfortable with, then you'll probably end up cashing out because you need the money. So only use money that you don't need in the near term and something that you're willing to use.
Right. Okay. And for you, Aaron, when you get started investing in cryptocurrency, how do you position your portfolio and maybe you share a little bit about history.
Yeah, so I think for me, how it started is like I fully agree with what Don says. Is that people should never like put something that they like money that they need or money that they borrow. It's something that is extra. So even if things happen to it, or if you make a newbie mistake and then something bad happens, you're not gonna be in financial trouble. So I think for me, it was a lot of reading, a lot of studying at first, but then start small. Start small with an amount that really you're comfortable with, just to understand and learn. People call it skin in the game because I think you can do a lot of reading, you can do a lot of talking to people, but unless you actually try with a little bit of your own money, that's you're not really motivated to learn. So I think that's important to, if you are in that financial stable state, just to try with a little bit and then learn from there, because that's when it gets interesting.
Yeah, as well said. So basically, both of you are saying that we should really be investing on money, that our excess saving rather than our core saving, and or maybe even I see some people starting to buy cryptocurrency with credit cards and things like that. So that's a big no.
Yeah, I think anyone responsible will tell you that buying on debt is not a good idea. Yeah.
Yeah, exactly. So it kind of link back to how I invest in the stock market as well. Like people talk about very high risk stocks and a high growth stock which is more risky. I tend to have quite small position on those, and maybe a big part, say 80% of my portfolio are on very stable companies with good dividends, and then I only play with that 20% where I can take more risk. And so if they make a good return, it's still meaningful, but yet if I lose them, it's still I can still recover from it. Yeah.
Right. Yeah. So any stock tips for us, Stanley?
No, wait for your crypto tip first. hold your horses. Okay. Now, someone is asking. Wu is asking. Actually, how do you value a cryptocurrency? Say, because inherently they are almost like gold or silver. There's no intrinsic value. How would you go about valuing it, Don?
Okay, so I think what we need to understand is that crypto is really new. So there is no universally accepted standard of valuation. But I think a good start would be to first understand what the coin is, what type or what category the coin falls under. So for instance, there are some coins which could serve as a form of passive income. Like for example, KuCoin, which is the coin type to KuCoin Exchange, actually does regular share, but they actually share their profits with the owners of the coin. So you could then project the value by calculating and estimating the growth, the number of transactions that they do, the transaction cost that they earn from each transaction, and then projecting how much you would get as a shareholder based on your percentage of their owning. So that could be one way. Another way would be the utility of the coin. So if a coin seeks to disrupt a particular industry, you probably want to understand what the industry is worth, and then to understand how much is that problem costing companies or businesses right now, and try to project in terms of the crypto solution, how would they seek to earn money? How would the token or the coin be used in the system? And then you try to project it from there. So there are many complicated models that you could run in terms of financial valuation. But just a disclaimer, I actually do not really go so much into detail. I actually rely sometimes on other people's financial models to work out the calculation, because my take is that I would look fundamentally at the qualitative value. And if it doesn't pass that criteria, then I'm not even going to be bothered looking at the quantitative one.
True. Okay. And what about you, Aaron? Maybe you can share with us a little bit. I'm not sure. Do you still own some Bitcoin right now?
I never sold, so yeah, I still do.
And then how would you value your Bitcoin?
Right. So I think when it comes to digital currencies, Bitcoin, any of the other coins, like Don said, it's like a really new industry. It's not like the stock market where you have like discounted cash flows and PE estimates and things like that. I think, to be honest, even the experts are still building their own financial models. So it is very hard to like come up with like a universally accepted, this is the way we're going to value coins. I do follow a couple of people, which I want to shout out their names here. I mean, I follow them on Twitter. I find that they have really cool ways of valuations, which, again, I don't know whether it will come true or not, but like there's this guy, Chris Burniske, Burniske, and then the guy, Willy Woo. These guys are on Twitter, so you can Google Willy Woo or Chris Burniske valuation of tokens, valuation of cryptocurrencies. But again, it's a really new industry. No one can predict with certainty. And I will say that the markets have seen a lot of speculation. So the markets may not be entirely driven by fundamentals. So it's hard to say that this coin is fundamentally sound, and then you see that the coin just drops, and you can't say that my valuation is wrong, because the market seems to be driven by speculation a lot right now. So it's a little bit hard, but I think I would go with trying to understand the use case of the coin, trying to understand the total market available to the coin.
Right.
For example, like a coin just for dentists is probably not going to be like DentaCoin. To me, it doesn't make sense that it's going to take over the world, because it's just for dentists. Whereas Bitcoin could be like one day a way that offshore banks could compete with offshore banks to store value. So that to me has a huge use case. And I have to believe, like, in the long-term viability, that's when I would be more comfortable with putting my money in.
Right. Okay.
Yeah, I hope that helps.
I'm gonna jump in for a little bit as well, and I'm gonna compare it to the .com era, right? Back in the day, the stock market has been around for a long time, and we have certain financial valuations and ratio at discerning what they're quantifying their worth. But when companies like Google, Facebook, and all of those internet companies, like when they started coming out, there was no way to measure them as well. If you use PE, some of these companies are basically burning money. Amazon was burning cash for a large period of time. So how exactly do you value them? But today, we now have a better basis to value them, because there are more companies like them. We're a lot more familiar with them. We do see how they earn their money. So I would say crypto is the same. There's not going to be a universal standard for some time until blockchain and crypto is more stable. But there are different financial models that you can use. But again, like what Aaron said, don't take them as typical truth, because it probably there's a very good chance that they could be totally wrong, or other coins might come up, and then your valuation will also fall.
Yes. Oh, okay. I think you make a very interesting point of when the stock market was first started. Things was also a lot messier, and even though if you value stock very systematically like a value investor, you might not make money in it because no one else is following your strategy, right? So I think you're saying that the cryptocurrency is also trying to figure out their system, and so of course it's going to be more volatile, and as the market matures, then you will see a more proper and maybe more synchronized way of how everyone's value things. That's a very interesting point.
Hopefully.
Yep. Okay. Don, I think we have quite a few comments that they can't really hear you, so maybe you have to speak a little bit louder. Okay. Yep. And okay, going back to the questions that we previously have collected. I think we collected a few questions. So I think a lot of people, maybe for those really just starting out, there's very confusing. So there's things like ICO, there's mining, there's just buying Bitcoin or Litecoin. So maybe Aaron, you can share a little bit. So what really is ICO or mining, and what's directly buying the coin itself? What are the risks and the pros and cons, maybe?
Wow, that's like 3.5 questions in one.
Okay, maybe you go with.
Can we take it like one at a time?
Yeah. Maybe you handle the ICO, and then Don will handle the mining.
Okay, so I mean, it's not the best way of explaining an ICO, but I like to sort of use analogy. And ICO is like a way for crypto-related companies to raise capital, and then with this capital, they can invest in their team, they can invest in the infrastructure that they're building, they can invest in like marketing and sales. I view ICO as a way of fundraising, and sort of in exchange for that fund, you get a token, and that token or coin is what will be used on that company that's doing the ICO, that will be used in their network later. So for example, if Stanley wants to come up with Stanley Coin, and Stanley Coin is used for a certain something. For example, maybe hosting events. Stanley might raise an ICO. The money will be used in the generation of profits and business operations of Stanley's operations.
Right.
So I mean, again, it's an imperfect analogy. There are big differences, but I look at ICOs as a way that companies raise money directly from investors. And the thing to keep in mind is severely unregulated. So there are very high risks indeed.
Yeah. Yeah. Okay. Interesting. Yeah. It's also kind of because ICO is only a recent phenomenon, and every time a new thing come up, like even Bitcoin, when Bitcoin first came out, I think in 2008 or 2009. So most of the people using it are still, a lot of scammers and crooks. So they tend to be always the first guys to jump onto things because they are risk takers, right? So
Yeah.
we sort of seeing the ICO trend. A lot of scammers are jumping on the trend as well. But as the market matures, maybe we'll have more legitimate businesses or ecosystem that really will benefit from having ICO. Would you agree?
Yeah, I think the ICO space is being looked at very, very, very tightly by regulators because it's sort of like to a degree even more sort of like not in compliant with like existing regulations because it's sort of like raising capital, raising money for business, but you're not doing it like the IPO way, which is like the normal way people raise money for companies, or like a angel investing venture cap kind of way. It's so ICO is like totally unregulated, and it directly affects the public. So I think regulation is definitely coming, and we are starting to see like established companies trying to do ICOs. I think maybe there have been like 3 or 4 public listed companies that are starting to think about ICOs, and even Telegram is thinking of doing an ICO.
Right,
so
okay.
I think the space will become more and more regulated, which is probably good for the average investor. Yeah.
Ah, interesting. And maybe on Don, so what really is mining, and how can we, be a miner?
Okay, I have to first give a disclaimer. I don't really mind because I don't see the value of it. But okay, for the blockchain, basically, mining involves solving the complex mathematical problems so that the transactions get validated.
Right.
So that's basically the work of the miners, and in return, then they would get rewarded with the coins that they're mining and validating the transactions for. So I think if you want to get started, there are a few ways. There is cloud mining. There's also physical hardware mining where you can go out there and buy like an ASIC rig, and then get started in your own house. But I would always say go and calculate your risk and reward return because you need to generate your fixed cost is in the electricity and cooling systems, and the rewards are not always fixed. So and in fact it gets harder over time to get the coins. So I would say mining isn't really for everyone, but yeah, these are some of the ways that people can get started.
Right. Okay. And what do you think of mining companies like Genesis or what's the other field like Hashflare or something?
Hashflare. Yeah. My personal take is that I stay away from mining, so I don't really do too much in that. I rather spend the money into buying the coins that I believe in rather than spending it on a mining contract because I see better rewards over there.
Okay. Yep. So maybe just to summarize a little bit, so basically ICO is a way for people to raise money without going through the actual regulational process, and mining are just people who are maintaining the infrastructure of the coins, and we can become a part of that either by buying the equipment ourselves or maybe through mining contracts with some of the big companies. But okay, and interesting.
Yeah,
and,
Stanley, if I could jump in, I view mining more like you're lending your computing power to the network, so you are getting paid for it. That's kind of how economically it works.
Right.
I'm lending my computing power to the network to help the network. That's why I'm getting paid. I think mining is a little bit of a misnomer or not really the best name. Yeah.
Okay. Maybe going back to managing risk on your investment and on cryptocurrency assets such as cryptocurrency. so we talk about so many risks associated with cryptocurrency, right? You're talking about regulational risks. You don't know what the regulators really want to do now. We talk about inherent risk with the coins, whether it's really usable, the mining risk, the ICO risk. And what do you think? What's your ideal position or ideal scenario where that needs to happen before you say, oh, now I think cryptocurrency are considered a safe and defensive asset rather than you will become what people view as gold now, rather than viewing it as a very speculative asset.
Wow, that's a tough one, Stanley, because will it ever get to a state where you can call it a defensive asset? I really don't know, because
no faith.
So-called defense. So-called. It's sort of like stocks, right? Stocks have been around for hundreds of years, but you don't really call stocks a defensive asset either.
Right.
I think every asset class has its place in a portfolio. So I don't know whether crypto will ever become like a defensive asset, but it's going to need a lot of time and a lot of regulation, I guess, to some extent, before the average investor can, I guess, feel more secure in crypto or digital currency, so to speak.
But isn't it ironic though? Because the whole purpose of having cryptocurrency is to be deregulated, but then it needs to be regulated to give people confidence in it.
I don't think it's a confidence question, and Don, sorry, I know I'm talking a lot, but you can jump in later. But I don't think it's a confidence thing. I think it has a lot to do with understanding human behavior and also educating people. Because if you ask me, are the majority of people equipped to be totally independent and run their investments themselves? Probably not right now. So, my ideal state is when everyone, yes, they can be independent enough to make wise financial decisions. But I think what we've seen is that we have to help them a lot. And regulation may not be from governments, or it may not be from external parties. It could be like service providers who actually make it very simple and very safe to buy digital assets. Yeah.
Okay. And your thoughts, Don? Will crypto ever be a defensive asset?
No. Okay, I think again, as we're in the early stages, right? People need to start getting confident about crypto, and I guess it's a good irony that you pointed out, but that's just really how human behavior and psychology works. Yep. People are not going to believe in its legitimacy until a trusted authority tells them, yes, it's legitimate. And I think because of that, I really applaud what Singapore and Japan are doing in not banning crypto. So I think in terms of honesty, everything has risk. Everything, even stocks are not technically a defensive asset. If you invested in some stocks that went down, then the bond classification of stocks, but are they really defensive?
Yeah.
Not really. So I think it's just really about how we manage the risk to reward in any sort of investments.
Yeah, well said. Okay, so I think so what we have discussed today is basically saying that we can still invest in risky asset, yes, no problem. We shouldn't say that just because maybe you tag yourself as a value investor like myself, and we should only invest in very undervalued stock. But I don't think that's the case. We should be more open-minded when new things come about. But when new things come about, there's inherent risk with it, and it's really very important for us to size our position to make sure that we don't over leverage ourselves or just expose ourselves to too much risk. Right? It is really about not just what you buy, but rather how you buy it is also important. Would you agree?
Yeah, absolutely.
Yeah.
You can't sort of paint the same investment rule for everyone with a broad stroke, right? Like it may make sense for me and Don. It may not make sense for someone who has 12 months credit card debt. So yeah.
True.
I would also say there's a lot more work involved. So people who are going to get started on crypto also probably need to look at things like wallet security,
Yeah.
because we can trust the exchange. The stock exchanges are pretty much there. It's quite hard to hack and steal our stocks, but that doesn't happen in the crypto space. So people need to understand those inherent risks. It's not always just about finding wallet.
Yeah, true. True. So,
And it's a lot of studying. So someone needs to be willing to study day in and out and really understand what the coin does,
Yep.
instead of just jumping into it because, oh, the founder is so and so of an X investment bank or a really big Fortune 500 company. It's not just that. You really need to understand what the coin is, what it does, how it's going to do it, who the team is, and then what industry that it serves to disrupt.
yes. Wow, interesting. So it's really like a cowboy town, right? So every endpoint there's a risk with it. The coin has risk, the wallet has a risk, the exchange has some risk. So you really need to be aware of all these risks before you really start investing in such assets. I think that's all we have for today. Our half an hour session is up. I really want to thank both of you, Don and Aaron, for coming to our Facebook Live event. If you guys want to follow them, maybe Aaron, you can share a little bit about how people can get in touch with you, and Don as well. Aaron, maybe you want to start?
Yeah, just wondering if there were any questions from the audience. Or
they have been asking, so I have been all those questions are not really from me, so rather it's from them.
Okay, cool. Yeah, I mean, again, you guys can follow me on Twitter, can follow me on my blog. Again, Stanley, maybe you can share the link to them. It's a website. It's called Mr. Stingy. And yeah, send me questions, email me, Twitter me, whatever, and hopefully we'll have a conversation.
Definitely. And Don, yourself, how can people
first
get to connect with you?
So I'm pretty active on my blog and Facebook. I post quite regularly. It's www.stbudgetrate.com, and I post updates on Facebook as well. Actually, I might just take this chance to shout about a recent valuation model that I shared. It's not done by me. It was done by someone else for a coin called OMG. And someone who's curious just to see how a valuation might look like, look at that spreadsheet. I think it would be really useful. So yeah, reach me on my blog or on Facebook. That'll be the best way to find me.
Right.
I'm also on Instagram.
Okay. Yeah, I'm a follower of your Instagram, so I'll share all the link down with everyone later. So thank you once again, Don and Aaron. I hope we can bring you up our show again sometime soon.
Thanks, Stanley.
Thank you. Bye-bye.
Bye, Don. Bye, everyone.